Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In today's video, we are going to talk about a company that I personally like. I personally go to their store to purchase a lot of my personal things. So if you're interested in this company, you definitely want to sit back, enjoy it. We are going to go through many different sources to kind of break this company down and get some information on what other sources think about this company. So hope you like this video. Give it a thumbs up if you haven't done so, and if you're new to the channel and you like this kind of content, definitely subscribe, hit that notification bell. With that said, let's take a good look at this company. So the company I'm talking about is Walgreens. The ticker symbol is WBA. So those of you that are not familiar with this, it is a drugstore service, engages in retail pharmacy, includes operation of retail drugstores, health and wellness services. So I like going to the store. There's a lot of stuff that I usually get, like vitamins and all sorts of stuff, especially get some back to school stuff. Those of you that are parents as well as photos, definitely kind of like a one-stop shop, as well as you get your medications. Let's take a look at Simply Safe Dividend. Based on their safety score, they rated it as 79, which is safe. Again, the dividend yield is 4.9. Market cap is 33 billion. Currently at the time of this video, the price is 39. Now if we look down further to some of the key metrics, so you can see payout ratio is about 35%. You got your increase in dividend during a recession, dividend streak of 46 years without a reduction, so that is pretty solid and pretty impressive. Looking down more to the dividend growth, you can see the last 5 years 5%, which is average. The last 20 years 14%, which is very fast. Now look at that chart, you can see it's an upward trend. Now if we look down here, it's an uninterrupted dividend streak of 46 years without a reduction, and dividend growth of 46 years consecutively, which is amazing in my opinion. Now a little bit more on your dividend payouts. You can see you get paid quarterly. In the months of March, June, September, and December, your annual payout would be $1.92 per share, which breaks down to about 48 cents per quarterly. The ex-dividend date is August 18, which is 14 days away. Now, if we look down further, you can see some of the information from Simply Safe Dividend. They say it may be undervalued. You can see the dividend yield. PE ratio is 8.9 versus in the consumer staples is 22. 52-week range, you can see it's in the 39, which is in the low. So the high was 54. Looking down to some of the earnings per ratio, you can see 43%. Now looking down even further to the total sales, you can see 135 billion. And then looking down to the earnings, return on equity, and returns on invested capital. Yeah, you can see it's a little bit going down. Now let's take a look at NASDAQ. Looking at the dividend history, so you can see payout ratios, PE ratio is 6, dividend yield is 4.89. As you can see, you get paid on the 11th, 12th, 217, 519, 818, so you can see about like 48 cents per share. So you can see total of these comes out to $1.98. You can see it's been giving dividends for a long time. Now, one of the things I like to go to is to look at other sources. We're looking at stock Rover. You can see based on stock Rover, you can see the other information in there. Sector is the healthcare. Financials, you got price to earnings 6.6. You got EPS 5.92. You got a dividend yield, as you can see from there. Market cap is about 33 million. Now, if you look over here, what I also like to look at is some of the returns versus benchmarks. You can see here, you can see the growth, and then the profitability. I like to look at the rating versus peer, so you can see pretty good profitability. So if you're not, I'm not affiliated with Stock Rover, but there is a free trial, so definitely want to check that out. It's a lot of information in my opinion, and I think it might help if you want to get some more information. But I like using this one. I'll get through it as we go through many different stocks, and I'll show you some of the parts of it as well. Now looking at Yahoo Finance, you can see the major breakdown, and then the top institutional holdings. As you can see, Vanguard on May 30th, they bought about 59 million. You got BlackRock, State Street Capital, so they've been buying a lot. And then you got your mutual funds in there, so pretty good amount of institutional holdings. Now looking down to bar chart, one of the things I noticed is that they had an article, Motley Fool, on August 2, 3 down stocks that are screaming buys in August. If you get a chance, read them. Some of the really good companies. Johnson & Johnson is one of the ones they talked about. And then you got right here, Walgreens. Definitely they talked about how some of the positives about Walgreens. Some of them is it's been using its capital to reduce the debt on its balance sheet. So, and then you can read a little bit more about it. So those are some of the highlights in there. So, arguably the most exciting growth channel for Walgreens is its partnership with Village MD. So this dynamic duo has opened 100 full-service clinics at Walgreens locations as of May 31st. So definitely, if you get a chance, read that article a little bit more. Now if we go a little bit more to bar chart, you can see 6 months, you can see it's going down a little bit. The technical is regarded as sell. Now if we look down to some of the analysis based on 13 analysis, they rate it as a hold. You got 11 hold, 1 moderate sell, and 1 strong sell. Now moving along to simply Wall Street, you can see some of their evaluations. So we go over here, you can see some of the price to earnings ratio, but I would like to go to some of the dividend yield, so you can see some of the future growth. Here's some information on there, and then the other one, the future return on equity. You can see the company 10%, industry 14%. You got your past performance, past earnings growth, return on equity. So the company is 15%, industry is 14%. Return on assets, you can see right here some of the information right there, financial health. So I like also simply Wall Street. Definitely one of the key sources that I always like to look at. You can see right here a little bit more of the long term and the short term. So you got the assets on long term versus the short term right here. And then you got debt to equity, you got the balance sheet, and you got the dividend. So like I said, all right guys, that's it. I like the stock, so I used to own it, sold out on it. Definitely going to look into it a little bit more. Probably as it continues to drop, maybe start doing dollar cost average. With that said, thank you so much for watching, man. I really appreciate it. If you haven't done so, hit that like button, hit that subscribe button. As always, please remember, be safe, stay cool, and keep investing, and definitely check out some of my videos, all right? I'll catch you guys in the next video, all right? Take care. Aloha.